So there you go. So yeah, welcome to everyone, both clients and non-clients. For those who don't know me, my name's Robert King. I'm the director here at Experian. Sitting next to me, I have Petra, who is co-founder of the business and what I often refer to as the brains of the outfit. So Petra will be sitting next to me. I'm not actually sure if she can see the chat questions coming through at this stage. So if you do have a chat question, a question as we go along, can you actually just, in your drop-down box on the chat on the right-hand side, you should be able to pick Petra as an option. If you can pick Petra as the option before you ask a question, she will see that and she'll be able to take that down as a question for us to address, because actually now that I'm sharing my screen, I can't see those. So yeah, so once again, welcome. The session today will, look, we've tried to do a time run as to how long it will take. It will be anywhere between sort of an hour and a half. So there are a lot of topics to cover. We will talk about the government incentives and what are available there, but also we'll talk about sort of non-government things that you can do to hopefully protect your business moving forward as well. So to start off with, we'll look at the government things and then we'll move on to the non-government. When we initially put the webinar together and the slides, we titled it 10 things you can do to protect yourself during the crisis. But putting this together over the last sort of week or so, we've ended up with about 80 slides, so there's a lot of information. So look, sit tight, bear with us, and we'll take this journey together. So the first thing I want you to do, if you can, is in your little chat box that you've got there, I'd just like you to jot down 3 things for me. Firstly, what industry you're in, and when I say industry, it could be retail, wholesale, you might go cafe, restaurant, whatever it might be, how many staff you have, and if you actually have any apprentices or not. So those questions will become relevant as we work through the slides, and I'll get an idea of, particularly for those that aren't existing clients, what you've got as well. So if you can just do in that chat box, that'd be great. And if you can direct that to Petra as well, that would be awesome. Okay, moving on. So to start off with our take on the whole virus scenario, look, those people who know me know that I'm generally a pretty positive person by nature. But to be honest, this is something like I haven't seen for, well, in my 25 years being an accountant. So I generally think there's hard times for 90% or more of our clients in the next 6 months. And a lot of our clients will probably fall into 3 different categories. Those that are going to survive but do it tough in the next 3 months. Those that will actually thrive, and believe it or not, there are some clients who will actually do really well out of this. I won't mention any specific industries, but it's not all doom and gloom for everyone. And the last category, unfortunately, are those that are hardest hit, and to be honest, to be brutally honest, I should say, they may not be in business in 6 months. So they will have to make some very tough decisions in the coming days and weeks about where and what they do. So look, we're going to jump into it now. We're going to talk about the government packages, and that's our first thing. And look, if you've got any questions, just ask if you can leave those till the end, or we'll address the questions at the end rather than doing them as we go, because hopefully we'll answer a lot of questions as we go along as well. Okay, so hopefully you all are aware that there's sort of been 2 major announcements recently, one a week or 2 ago, being a $17 billion, what they call a stimulus package, which seemed huge at the time. I was blown away by what they did for small business. But very swiftly, the government realised that wasn't going to be enough, and they then threw a $66 billion, what they're calling a safety net package, into the fray. Look, there's a lot of talk about governments not acting swiftly, but to be honest, I think they've done a great job in getting these packages out to the public pretty quickly, before things go completely pear-shaped. Whether they're going to work or not is a different story, but I support them fully for what they've done. Third thing we look at is state government announcements, so particularly what the governments are doing in relation to payroll tax. Now, payroll tax won't apply to everyone in the group, and we will focus on New South Wales, Queensland and Victoria, because that's where majority of all our clients pretty much are. Oops. So I mentioned before, if you're online earlier, just about keeping yourself up to date with changes. As we saw a second ago, they've brought out 2 stimulus packages pretty quickly on the back of each other. Things are changing all the time. New initiatives are happening every day. So keep on top. And look, please don't rely on social media for your source of news and information. It isn't accurate. And we will sort of give you the right government websites to go to keep yourself up to date with some of the announcements as well as we go along. So jumping into the first stimulus package. So it's hard to imagine that this only came out a week or 2 ago. And initially they were talking about giving a 50% reduction on your pay-as-you-go withholding. Now, keep in mind, pay-as-you-go withholding is effectively the tax on your wages to your staff, okay? So initially they were giving you a 50% reduction on that up to $25,000 in the first stimulus, but then very quickly the second stimulus came along and it's now 100% of your pay-as-you-go withholding. So again, your tax on your staff wages up to a maximum of $100,000. Now that is huge for a lot of business owners, and we'll get into some specifics on that a little bit later as well. Second thing there is in relation to apprentices and trainees. So a few of you put in the list that you do have some apprentices and trainees, so we'll spend a little bit of time on that. And start off with the main thing there is that it really applies if you have less than 20 full-time employees. So when we say full-time employees, if you've got 40 people part-time, you'll still apply. So you've got to have an equivalent of full-time employees, and that's effective from the 1st of March. And there's no size, doesn't matter as to what your turnover is, and it applies from January to September. Now, more specifically, what they are doing, how it will work, is that you'll be reimbursed 50% of your apprentice wages up to a maximum of $21,000. Now, when we say wages, we're talking about net wages, because the government also has the package for the tax associated with that. So we're talking about net wages there. Now, if you can no longer afford the apprentice, and that's what some clients are saying, they're saying, well, it's all good and well to have the stimulus package, but if they don't have any income, they can't even afford to keep the apprentices on, then unfortunately you lose that, because it is based on what you're actually paying the apprentice at the time. Now, there's a contact the Australian Apprenticeship Support Network for eligibility assessment. Now, the important thing with this particular one is that the subsidy, you can register from early April, so it's not actually available yet. And I jumped on the website a minute ago, and if you have a look, this is the website that you want to be on, the Australian Apprenticeships website. Keep an eye on this. If you have apprentices, I dare say they will put information on that website once it becomes available. So keep an eye on that one. And you'll need to lodge your claim by 31st of December. Important to note, it's not automatic. So unlike the first measure I talked about, where you'll get up to $100,000 for your wages, this is not automatically. You do need to apply for it. Okay, so put it on the list to do. As I said, it's not available right now. Third thing the government announced is the increased asset write-off. Now, this is something you don't need to be too concerned immediately, because it is something that will reduce your tax at the end of the year. But you would have previously known, hopefully, that there was a $30,000 write-off. Now, what has happened is they've increased that to $150,000. So if you buy any asset up to $150,000, you'll be able to write it off fully in the current financial year. And that's either new or second hand, either or. And as you can see on the screen, your turnover must be less than 500 million. I'm pretty confident when I say everyone in here is probably under that threshold, so it should be fine. So again, no need to do anything now. We'll work that out at the end of the year. The important thing there, a couple of important things, I suppose. If you're buying a car, that only applies, there's a luxury car limit, so you can only do it up to $57,000. Anything over that you won't get a deduction for. So please don't go out and buy yourself the latest Teslas. Keep it sensible. Now's not the time to be splashing your cash around. And note with this, a lot of people used to see this $30,000 supposed handout from the government for these assets and assume that they were going to get cash back. It's not a handout. It's simply you being able to claim a deduction in full in the year you purchased the asset. Okay. On the back of that, there's also an accelerated depreciation. Now, people are a little bit confused as to those two. Predominantly, that previous one, the 150,000, will be the majority that people use. Bigger businesses will also be able to access this accelerated depreciation. And what that is it's only for new assets that you purchase, and it will go past the 30th of June 2020, whereas the other one was up until the current end of financial year, so it'll go to 2021. And what they'll enable you to do is claim 50% of the cost of the asset up front, and then the balance over the normal depreciation rules. And again, it has to be a new asset. So, but not as attractive as the previous one, the 30,000 or the $150,000 one, but it may apply if you buy something after 30 June. And again, no need for you to worry about that. That's something we do at the end of the year when we're looking after your tax. There's a comparison on screen between those two types of depreciation and how they interact. The important one is really the only time they intersect each other is that first point. If you buy a new asset before 30 June, you actually have the option which one to apply. And again, we'll look at both options and see which one is right for you as well. Okay, so that was the first announcement that they made, and to be honest, probably a lot of people have quickly forgotten about that, because on the weekend just gone, they've now introduced this second $66 billion, what they're calling a safety net package. So we mentioned before that you were previously entitled to $25,000 in that pay-as-you-go withholding amounts. That is now increased to 100,000. So we will work our way through that and how it works, because probably 75 to 80% of the inquiries that we get at the moment are based around this one topic. So if you do nothing else, pay attention for the next couple of minutes while we work through this one, because this is probably the main one that people have questions about. Okay, so what it is in detail is it's based on your wages that you withhold between the 1st of January and the 30th of June. Okay, so when we talk about anything here, it's during that period. You're eligible if your turnover is under 50 million, again, and that's based on prior year. Everyone should be fine there. So what will happen, how it will work, you'll get a credit for 100% of the pay-as-you-go withholding, so the tax on your wages, up to $100,000. Now, if you're a small business, if you only have a very minor amount of wages that you pay, even if you pay wages and withhold no tax whatsoever on those wages, because you might pay just someone to come in casually and do some minor stuff, you'll get a minimum of $20,000, even though the amount you physically should have paid was much less than that. Okay, so again, we'll work through some examples on that. How it will work depends on how much tax you actually pay on your wages. So typically, and again, between January and June, there's 3 different scenarios. If the tax you pay during that period, and again, tax on your wages, is less than $10,000, if it's between 10 and 50, or if it's over 50, there's 3 different scenarios. So the first one of those we'll look at, so if you've only got to have a relatively few amount of staff, this will apply to you. So let's assume that your tax on your wages is $1,000 a month or $3,000 per quarter. Now, we've got 2 columns there. The blue column is if you report your BAS monthly. The second column, if you report quarterly. So if you report monthly, generally you would be paying $1,000 per month, as you can see in that sort of first column. What will happen is when you lodge your March BAS, and your March BAS is coming up in 6-7 days' time, if you lodge your March BAS and you report $1,000 payable in tax, they will reimburse you $10,000. Okay, no questions asked. I'll say money in the bank. Assuming you've paid all your taxes up to date, they will refund you that money. If you've got taxes outstanding, they'll apply it against your outstanding taxes, but otherwise they'll refund it. After that, you won't get anything for April or May, but then in June, it'll kick in an extra $10,000 over a 4-month period. Okay, so if you're on a monthly report under $10,000, just work through those numbers. If you're on a quarterly reporting cycle, which is probably more likely the case if you're a small taxpayer, your first quarter for March coming up will be $3,000, and again you'll immediately get $10,000, and then in June you will get another $5,000, and in September you'll get another $5,000 as well. So as you can see on screen, in your case you'll actually get more to you than you should have paid. Okay, so it's definitely good news for those taxpayers. We'll work through a scenario where you're between 10 and 50, and I'll work through the monthly and the quarterly as well, because the monthly is pretty important, because what's going to happen if you're on a monthly basis, you can see on the left-hand side, we assume that you pay $7,000 in tax per month. What's going to happen on your March BAS, they are going to look at the tax and times it by 3. Now, their reason for timesing it by 3 is, in their eyes, they're compensating you for the months of January and February. So you'll be entitled to a $21,000 credit in that month of March. So even if you've paid, if you've paid all your taxes up to date until then, you should then be getting a refund of that for that period. You will then lodge your April monthly BAS of $7,000. You'll basically not have to pay that component of your BAS when you lodge your April BAS. And the same thing with May. You'll lodge it and not have to pay that tax component. When you come to June, same thing. They'll give you the $7,000, you won't have to pay that, but they'll also start paying you for the same amount that you've paid to date. So they would have reimbursed you at that point $42,000. They will then start giving you that $42,000 again over the next 4 months. Okay. So if you're on that cycle, work your way through those numbers. If you're on a quarterly cycle, it will be very similar, except on a quarterly basis. Your March BAS will have $21,000 on it. They will reimburse you that into full because you're under the 50,000 threshold is what they're looking at the moment. Your June BAS, you lodge with a $21,000 payable. Again, they will reimburse you $21,000 in full, or again, you won't have to pay that $21,000. Then they'll kick it in again and step it up and do the same thing for June and September. So you can sort of see what they will reimburse you. They'll sort of double up a little bit in June, which is great, and they'll give you some more in September. If your wages is more than 50, I'm just going to work through the quarterly side of here, because if your wages is more than 50, you're most likely on a quarterly cycle. So let's assume that your tax on wages is $45,000 for the March quarter coming up. When you lodge your March BAS, you will not have to pay that $45,000 tax on your wages. When you get to your June BAS, and if you have to report $45,000 tax on wages, they will reimburse you or give you a credit for $5,000 only. Because you've reached your $50,000 limit, they will give you $5,000 or credit you with $5,000. So you've met your maximum $50,000 limit, and they will then allocate another $50,000 over the months of June and September is the way it will work. Okay. So again, we'll give you these slides at the end of the webinar so that you can work through your own situation and see how it will work. Keep in mind, this is as per the rules right now. This may well change in the coming days or weeks, but this is currently how it stands, and it has been legislated as well, so I can't see them changing this one based on that. All right, so a couple of quick questions we get from clients in relation to this, or that we have been getting in the past few weeks. Firstly, yes, you still have to lodge your BASs as per normal, and yes, you should try and lodge them on time so that anything you're entitled to comes back quickly, because until you lodge your BASs, the tax office won't know what situation you're in and won't be able to apply these subsidies to you. We've had clients ask when they're going to get their money. This isn't a cash splash that the government's going to throw money at you. You still need to lodge your BASs and get a credit for it at that point. So make sure you lodge on time. We've had a few people ask about whether they can, I'll use the word artificially inflate their wages. The ATO has said that they will be cracking down on this, and if you are caught, they will penalise you. However, there's no reason why you can't pay yourself bonuses or your staff bonuses if it falls within sort of the normal what you do within your business practices. So don't go crazy and overinflate things, because the ATO have said that they will be monitoring this. And not only monitoring this, if you fall under their radar, they're going to go back and look at other things prior to that as well. So yes, you can do it, but just please don't go crazy. Can an existing business register for pay-as-you-go withholding now to take advantage of this? Again, if it's legitimate and you just hadn't registered prior to then, yes, you can. If it's contrived, then no is the answer. Now, you currently cannot register online for pay-as-you-go withholding. The ATO have taken that facility away. You do have to call the ATO, which does make it a little bit harder if they start asking you questions, but you can go back and back register if it's legitimate. There is also a little bit of an opportunity to, if you're on a monthly cycle, because the ATO looks at the month of March and they don't even look at January or February, there is an opportunity for people on a monthly cycle to, again, pay themselves a bonus if it's appropriate as well. But just be very careful when you're doing things like this. So, the other question we have been asked a lot recently is, can you switch from a sole trader to a company now to take advantage of these packages that the ATO have released? Because the packages have really been designed for companies and or predominantly companies. So a lot of people are asking if they can change to a company now. The answer is quite simply no. The legislation that came through yesterday was very clear that the business had to be registered with an ABN in existence on the 12th of March. So yeah, we've had a few people ask that question, but that's the answer, which just came through in legislation yesterday. Okay, moving on. So yeah, so just a word of note, any subsidies under those ones, with the tax officer said if it's being claimed by dishonesty or fraud, it will be dealt with under the Crimes Act. So think Centrelink fraud, not ATO tax minimisation laws. The question then is, who does your BAS? So, because your March BAS in particular is going to be really important to make sure it's done correctly, and your June one just as important. So if we do your BAS for you, and we do BASs for lots of clients, we will be having a look at your March and June BAS, and we'll be speaking with you just to make sure that you get your entitlement, that you getting what you're entitled to. If you do your own BAS, you are responsible. So make sure you get it right. Make sure you read up on the rules, because as I said, the next 2 quarters are where you need to be reporting wages to be able to get any sort of subsidy back. If your bookkeeper does your BAS, and a lot of out there do have a bookkeeper on board, I say you are still responsible. A lot of bookkeepers don't keep up with the changes in legislation. A lot of them do, but you need to make sure that they are on top of things when they're lodging your next 2 BASs to make sure you get your entitlement. Okay, so again, that's probably the main topic that people wanted information about. What about sole traders? So again, there's a question we're getting a lot at the moment as to what they're entitled to. And to be brutally honest, they're not getting as much as the government in this regard. The government's priority is all around keeping people employed. So a lot of their stimulus has been revolved around that rather than sole traders. But there are some things that they are entitled to. I will run through those quickly. So they can still get all the asset write-off provisions that we talked about for the $150,000. They still get the pay-as-you-go withholding tax subsidy if you employ staff. Okay, so not on your profit that you need to pay tax on, but if you're employing staff, you're still entitled to the subsidies that we just went through. If your income is down considerably for the month of March, and I dare say it will be for a lot of people, and June as well, have a look. If you're paying income tax instalments, look at varying that down for the month of March, and also look at maybe applying for a credit for the instalments that you've paid for September and December as well, if appropriate. So you can get those reimbursed. There is also announced the ability to access super, and there'll be a little bit more on that on the next slide. And unfortunately, for a lot of people, and you saw if you've been watching the news last night, the lines at Centrelink are long at the moment, predominantly with hospitality staff. They have put on this extra $550 a fortnight subsidy, which previously was not available for small business owners. But if your business has been suspended, if you're a sole trader, if you've had to stop business, or there's been a reduction in your turnover of more than 20%, or 20% or more, you will be entitled to this $55 a fortnight payment. You will have to prove that your income has been down or that you've suspended. So be prepared to take some information along with you there. But so yes, there is some information for sole traders and so forth there. And also there is a tax-free subsidy available for everyone at this point for a lot of people. If you're disabled, carer, parenting payment, any job seekers, anything like that, there will be a $750 payment coming out to you guys as well. So, all right, so the recent announcement, they talked about super, and we have had a few clients inquire about this one, and again, particularly from the sole traders out there. So if you're unemployed or a job seeker, you're entitled to access your super. There's probably that last line there that's in bold. If you're a sole trader, your business was suspended, or there's a reduction in your turnover, again, you'll be entitled to access your super. Now, how that is going to work, it'll be available from mid-April. If you are with a retail fund, so with a HESTA or any of those retail funds, it'll be done via your MyGov account. So now is a good time if you haven't got a MyGov account, or if you do have one and have lost a password somewhere, which is usually the case with a lot of clients, now's the time to try and find it and activate it. If you want to access your super, that's going to be the quickest and easiest way to do it. MyGov is pretty slow at the moment. They're inundated with people jumping online. We did have a client say that they're online at 3 o'clock last night or the night before, and it went through perfectly. So if you have insomnia or you're an early riser, that would be the best time to jump on, get your MyGov account activated if you're trying to access that. What will happen is, once you do access your MyGov, they will ask you to certify that you meet relevant criteria, and then the HO will give you a determination and then advise your super fund directly to release those funds. So that's how the mechanism will work. If you have a self-managed super fund, stay tuned. There's no information for you yet at this stage. I dare say the HO will bring out some paperwork for you to fill out to, again, certify that you meet the criteria to have that money released. And so that's up until the 30th of June that you'll need to do that, because after 30th of June, from the 1st of July, you will be able to access an additional $10,000 if you need to as well. That pretty much covers it on the super. The next I will look at, and again, this is a pretty hot topic with a lot of our clients, is the small business loans that are available. Now, keep in mind, for everyone in Queensland at the moment, this is separate to what the Queensland government announced. So Queensland government has announced a separate one, which we will go through in a minute, but this was the federal one that was announced. So loans they're looking up, anything up to $250,000, and it's designed to help with working capital. Now that's the important part. What we're talking about here is not to do with your home loan. It's not to do with any long-term funding. It's to do with keeping your business afloat for the next 6 months, 12 months, 3 years' time. Okay. So with these particular loans, there'll be an initial 6-month repayment holiday. The government will guarantee 50% of the loan. So if you take out one of these loans and if you end up defaulting on it because your business collapses, then you will probably still have to pay 50% of the loan if they're wanting personal guarantees, but the government will guarantee the remaining 50%. Now, these aren't available as yet. They're still putting everything together. They'll be available from early April. And they're going to be through non-bank lenders. Now, this is the important bit as well. This isn't CBA, Westpac, etc. Non-bank lenders, if you've had experience with the likes of Prosper or Get Capital or any of those short-term funders, this will be done through those providers. Now, they haven't come up with a list of those providers as yet. They're still finalising those. But this will be a good opportunity if you do have one of those types of loans in your business. And quite often, if you're struggling on a day-to-day basis, you will have one of those. You should look at this as an option. So keep your eye out on the relevant websites. If you've got a Prosper loan or any of those, there'll be more information. And as soon as more comes to hand, we'll make it available as well. Because right now it's not up and running. Okay. So just again, to remind yourself, keep yourself up to date with everything that's happening. Things are changing quickly. We get a lot of our information from business.gov.au. Screenshot there of their website, and you can see they've got support for sole traders, support for employers and companies, and information on what is non-essential services. So please bookmark that page so that if you do hear anything, you jump online and get the facts as they come to hand. So pretty much everything we looked at there was the federal government announcements. So now we're just going to jump onto the state government announcements. Once we've finished state government, we'll have a little bit of a breather and see if there's any questions that have come through. But the state government announcements, we're going to look at Queensland, New South Wales and Victoria, and it's going to be mainly based around the payroll tax side of things. Now, keep in mind, when we talk about payroll tax, and a lot of people get this confused, it's not the tax on the wages that you pay on your BAS every month or every quarter. That's what they call pay-as-you-go withholding. Payroll tax is a nasty, horrible tax levied by the state governments if your wages exceed a particular threshold, and the threshold's different in every state. So if you do pay payroll tax, you will know about it, and we'll run through that now. So first of all, we'll look at New South Wales. Now, New South Wales what they have done is any employer that has less than $10 million in wages, what they're proposing is to reduce your annual payroll tax liability by 25%. So you still need to lodge all your forms and pay everything, but that will be the end result. Now, for anyone who lodges monthly, which is, I think, pretty much everyone, you will have no payment required for the coming months. So for March, April and May, you'll still have to lodge your forms, but you won't have to pay the forms. I'll pay the amount due. What will then happen is when you do an annual reconciliation, that will all be factored in, and they will say, what was your 25% reduction? And they'll do that calculation at the end of the year. And also they're looking at increasing the threshold to $1 million for New South Wales as well. So again, keep that in mind. Have a look on the payroll tax websites in New South Wales, because that changes from time to time. Queensland. Now, to be honest, we're a little bit disappointed with Queensland to start with, because they didn't announce too much for people up here. They did come to the party yesterday and they had some major announcements as to what they were proposing, which was good to see they actually stepped up. So as of yesterday, the payroll tax concessions for Queensland only. Now keep in mind, some people have staff that cross boundaries. So we've got clients that will have staff in different states, and they actually have to lodge a payroll tax form in each state as well. So even though you might be based in New South Wales, if you've got staff in Queensland, this will apply to you as well. So if you pay less than 6.5 million in wages, the Queensland government announced they'll do the following. They will refund you 2 months worth of payroll tax, and they're looking at refunding you November and December. Now, a lot of our clients this morning received an email directly from the Office of State Revenue here, and you need to jump online and request that refund. Now, if we do your payroll tax for you, don't worry, we will be applying for those refunds. Petra was madly doing all that this morning once the information came through, so you can get those refunded. For the next 3 months, now it's very interesting because they announced that it was the next 3 months, but they said January, February and March. So not quite sure how they worked that as being the next 3 months, but they're waiving the payroll tax for those 3 months as well. So again, if you've already paid January and February, we'll be applying for a refund for those as well. And then what they're looking at doing is deferring 6 months of payroll tax as well. So really good that the Queensland government stepped up and announced these yesterday, which is great. Keep in mind, you still need to lodge your return. So if we do your returns for you, we'll be doing those as per normal, applying for those refunds. If you're doing your own payroll tax forms, keep all this in mind. You need to keep abreast with the changes. You need to apply by the 31st of March to get your refunds back. So please, please, please make sure you do that. Queensland government also announced, now we talked before about the federal government loans. These are additional loans that the Queensland government has announced that they will put into place. Now, again, they're doing loans up to $250,000, similar to the federal government. and they're also doing 12-month interest free. Now, this was only announced yesterday, so there's not a lot of information on it at the moment. The Premier here did announce that a portal will be online in the coming days, so we're waiting for that to be up and running. So if you do need desperate funding from the government, keep an eye on the website and that's the qrida.gov or .queensland.gov.au, and that's where the information will be. You can actually register your interest as to whether you want to be up for those loans. So maybe jump online now and you can do that, so you're hopefully first in line. That pretty much covers Queensland, and we'll do a quick look at Victoria in what you're available. Victoria, I must say, has been the best state out of those three when it comes to payroll tax. So if you're in Victoria, or if you have people employed down in Victoria and your wages is less than $3 million, you will actually have your payroll tax for the full financial year completely waived, okay, which is fantastic. It'd be good if the other states did that, made it nice and simple, but yeah, that's great. Now, if you've already been paying your payroll tax, jump online, you'll be eligible to receive all of that back. And again, for our clients that have been lodging Victoria payroll tax forms with, I think Petra was online, jumping on doing that this morning, so you get that back. If you do your own, jump online, request that money back from the Victorian government. Good to see, Victoria, well done. All right, now I think I've got this slide in a few places, but as you can see, there's a lot of information. So pretty much what we've gone through is everything to do with the government incentives and what are available. Keep yourself up to date and online as to what they're announcing, because there will definitely be more stimulus packages announced as we find out how bad the economy is going to be. So what we might do is give you a little bit of a break, and give me a break as well. Have a bit of a sip of water, stretch your legs if you need to, and we might just have a look if any questions came through, or if you do have any questions about that, what you just saw then in the package, put them through on the chat, and we'll see what you've got. Okay, and I'll just stop sharing my screen there, and that way I can see if any chat questions have come through. Okay, so we've got a few questions here. I'll start from the book, or the latest, and work your way up. Yep, a few sort of good on you Victorias in there. Questions: can assets be digital? I'd have to just get some more information there, what you mean by digital, but generally an asset is considered anything that has a lifespan of more than 12 months. So if you've purchased something, and a good example of there is maybe if you've had to do a major revamp to your website, and you've had to do Shopify or something like that, and that asset has cost you lots of money, then yes, in that respect, you will be able to write those off. So does the asset write-off limit for vehicles include trucks and machines as opposed to cars? No, that is specifically for cars, that limited is available. So anything else you should be fine. And yes, thanks for that, Roger. And yeah, forklifts or anything like that are all fine. Just running through, so just having a look through any other questions there. We've got 3 new ones coming through now. Had a regional-based apprentice, will receive the regional incentive package for them. Are we also eligible for the 50% wage payment? Regional-based. So with the apprentices there, so if you've got that apprentice and you've done it through the apprenticeship scheme, then yes, my understanding is you will be able to get that back from the government. So again, yeah, you must apply. So that's the key with those incentives, those apprentice and trainees. You need to jump online and apply for those. Okay, so a really good question coming in from Vanessa and or Dean. Not sure which one's online there. Welcome, guys. So the question is, for companies, if the director or directors are employees of the business, then will the business qualify for the pay-as-you-go withholding subsidy? Absolutely yes is the answer. And yeah, so yes is the answer. Trying to think about more there. So quite often that's the case, and particularly that's the case in our business as well. If you've been paying yourself a wage, you can do that. So yes, absolutely. As we derive income from our business, so not for us. Yeah, definitely. And that's probably one of the areas where there's been a lot of contention, the fact that a sole trader can't pay himself a wage from his business, but a company can, and that's, I think, where a lot of contention is in the economy at the moment, and that's why I mentioned before a lot of people are trying to actually convert from a sole trader to a company to take advantage of that. And yes, it will apply automatically. You don't need to apply for that particular one. It will happen when you lodge your March and June BAS. Another question here, I'll run through this, probably the last one here. How do the pay-as-you-go tax credits apply to businesses that have been forced to close and will have no pay-as-you-go withholding from March 22 onwards? That's a really good question, that one. And for the that's really important that you keep paying yourself a little bit of a wage. Now, in this particular person's case who's asked this question, they've had to probably lay off all their staff. You need to keep paying yourself a small wage for yourself on your upcoming BASs. So on your March and June one, you'll still get those credits, but keep lodging your BASs with a small wage to yourself, and it can be very small, so that it goes through. If you stop putting that on your BAS that you lodge, then it will stop. So keep putting that you're paying a wage on your BASs. Very important. All right, so I'm just going to have a quick sip of water before we jump into the next section, unless another question comes through. Sorry, I've got one more question there, which I didn't see. As a company forced to close, does the $550 job seeker allowance apply? Absolutely. So effectively, if you shut your business down, if it's a company and you're no longer trading, you effectively fall into the category of being unemployed. So yeah, it's tough times for everyone, and yes, you will have to. There is a requirement. Petra's just writing next to me at the moment. As I did say, she's the brains of the outfit because she had to complete a couple of these this morning for clients. Doing a separation certificate as well is probably going to be required. So that's pretty important. Centrelink are going to want to see that, and we can send you a link where to get that, either for yourself or for your staff, because unfortunately it is a sad case that some of your staff will now be unemployed, and they will be asking you for an employer separation certificate so that they can go to Centrelink and apply for benefits as well. Okay, let's move on to the next part of the session now. This second part is not going to focus on what the government can do. It's going to focus on what you guys can do moving forward. Now, for a lot of you, this is a really hard topic. There's a lot of our clients are having to shut their doors, particularly for those that are in sort of the travel industry or the restaurant or cafes or anything like that. This is tough times. So hopefully, look, we're going to go through a few things. You've got to try and think about how these will apply to you moving forward. And we will kick off. I'll just share my screen again here. Okay. So the second part here, will be about what action you can take in your business. So we're going to break it down into 5 separate topics. Firstly, customers and clients, and this is going to be the really tough topic. I don't have any magic wand when it comes to your customers and clients, but hopefully I'll be able to give you a few tips and tricks. Employees will be the next thing we look at, suppliers, banks and what they're offering, and also the ATO debts and what you can do there. I'll kick off first with your customers and clients. The first thing we're saying, and we send an email out to all our clients, and hopefully if you're on our list, you would have received that, just to keep people informed. What's going on? Are you still open for business? If you are open, how are you doing things differently now? Just communicate with your clients, let them know what's happening. And I did hear something the other day as well, that if you are sending an email to clients, try not to put the words COVID-19 or coronavirus in the header. Now, the reason for that, and we did that ourselves, apparently up to 20% of emails flying around right now have that in the header. And what that means is a lot of spam filters are sending your emails straight through to spam, okay? So maybe header it something along the lines of what we are doing during this crisis, or something along those lines. So just try and keep those 2 words out of the subject line if you can. All right, so for customers and clients, as you said, keep them updated with what you're doing. Most importantly, alleviate any fears that they may have right now that's stopping them from purchasing from you. Now, I know what one of you in the room that asked a question before was in the restaurant industry. You did a really good job through your social media in informing people how they could continue purchasing from you, even though you were a high-class restaurant. And it worked to start with, but unfortunately then the government came and shut a lot of industries down, and they will shut more down in the coming days. I'm really surprised that hairdressers and the like are still allowed to be open. I dare say if you are in one of those categories, and I know 1 or 2 of you are in those categories, do not be surprised if the government shuts you down in the next week or so as well. So yeah, tough times. But if they haven't shut you down, look at some of these options. How can they buy from you still? How can you get your product to them? So a lot of people are now offering deliveries if that's possible at all. So if you are still able to open your doors, look at the way you market yourself. And actually it's a good opportunity to look at not only your Facebook marketing, but your Google AdWords. What are you spending money on right now to get your clients? A lot of people put sort of Google AdWords on set and forget. What you want to be doing is sending a message out right now to people is why now is the best time that they should be buying from you. And that's going to be very different for a lot of people. And again, it's not going to be possible for everyone, but that's the sort of slant you've got to put on it. Now, this next slide is the gentleman in the middle. I had to put this in here. This is going to be a live Facebook stream that's happening this Friday. It says 10 a.m. to 3 p.m, but that's Eastern Standard Time. So if you're in Queensland, it's going to be 9 till 2. The gentleman in the middle there is a guy by the name of Dale Beaumont. And some of you may know that our business, Petra, myself and our business are doing his coaching course at the moment. And he has some fantastic ideas on ways that people can market their business and grow their business. And if any of you need some extra help, and it's probably everyone in here right now, I implore you to sign up for his Facebook session that he's doing this Friday. It's a long session. It's, as you can see, 10 to 3, but there's so much he will cover. So please block out that time. We will be blocking out that time to try and get some information as well about what we can do, not only for us, but help our clients. So this is the information he sort of put out there. If you've lost customers, your suppliers going out of broke, clients can't pay, all of those things, events being cancelled. I know a lot of our clients fit into that category, that they've had events cancelled on them and they just can't do anything. Check out this Facebook page, and I've got on the next one here. This is his Facebook page, Business Blueprint. This is not a plug for him that I'm getting any benefit from. It's to help you guys to get through this crisis. So jump online and check out his session that he's got this Friday. Okay, we'll turn to employees. And again, we talked about communication, and with employees, it's probably even more important to keep them abreast of what you're doing in your business. Right now, they're probably as scared as hell, not knowing if they're going to have a job in a week's time. Keep them informed about the crisis, what's happening, and how it's affecting your business right now. Because right now you're going to have to make some hard decisions on staff, and it's important to talk to them. So that's going to be different for different people. So if you've got full-time or part-time staff, you're going to have serious conversations with them about reduced working hours, whether they need to take leave with pay or without pay. And that's going to depend a lot on your circumstances and what you can afford as a business. Some businesses that are in a good position will be able to say, well, okay, now's the time to take your long service leave or redundancy or stand down. Now, when we talk about stand down, it's a little bit different from redundancy. I suppose it's sort of like taking leave without pay in some respects, where you sit down with your staff and say, look, our doors are shut because the government's said restaurants are closed or whatever it might be. There's no work. We really want you as an employee. You're very valuable, but we can't employ you at the moment. Don't be afraid that they're going to go somewhere else and get a job if they're a good employee, because there's no jobs at the moment for them to go to, particularly in the hospitality industry. So again, have these conversations with them. If not only as a group, you probably need to speak to your employees as a group, but you might also need to speak to them one-on-one. Now, particularly think about your staff members that have children. There's a lot of talk at the moment about schools shutting, and it's probably a really good opportunity if you've got any staff that have kids to have that conversation with them and say, look, now's the time for you to take quality time with your children. Don't be worried about your job. It will be here in hopefully 6 weeks' time. We don't know how long this is going to go for, but have that conversation. Give them the option to start taking leave from home, work from home, or sorry, not work from home. Just take that time off, spend it with family. And for casual staff, that's a really hard one. When I put this slide together, there was talk about rotating rosters for casual staff. I don't know that too many people are in the position to do that anymore. I think casual staff, they're the ones that are lining up at Centrelink at the moment, unless they're working for Coles or Woolies stacking shelves. So yeah, everyone else is really hard. But again, it comes around to communication. I'll be the first to admit we don't have all the answers when it comes to staff. It is a tricky scenario, and you've got to keep up to date with the Fair Work laws, because every staff member is different. All the laws are different between everyone. Jump onto the fairwork.gov.au website. There's a lot of good information there about standing down staff. And if I share my screen here, you can see up the top here, they've got this section about coronavirus and the workplace laws. And you can see specifically they've got about standing down from work, working arrangement for schools, etc. Because there is some rules around school closures as well as to your leave. So important that you keep up to date with that information. Okay. The other thing we've been asked a lot about is working from home arrangements. So just so you know as well, our business, we've made the decision that we will be working from home effective from this Friday. So, and that doesn't come easy, that decision, and a lot of you hopefully will be in a position where you can do that. If that's the case, you've got to do some things. There's a few court cases that happened in the past where people have worked from home and injured themselves and basically sued the employer. There's one well-known Telstra case where that happened, and Telstra were found that they did have to pay this lady out, and she was entitled to work cover. So there are some rules and regulations you need to abide by. First of all, you have to get them to do a checklist of their home to make sure it's appropriate and safe for them, and look at the appropriate hardware and software that they're going to need. Video conferencing is going to be important. Zoom share price went through the roof recently because everyone's buying up or registering for Zoom conferencing facilities. It's important, if you do get your staff to work from home, that they do know it's not a holiday. They are still working and they're still required to meet their KPIs or whatever you set for them. Do a video conference, a Zoom conference, whatever your preference is, every day, preferably every morning, and probably again every night as well. So keep that in mind. Data security is important. Make sure all their computers have the appropriate virus protection, whether they're using your laptops or their home computers, really important. And the other thing, if everyone's going to be working from home, make sure that your phones are redirected. So, and we just thought of this for our own business ourselves this morning. We're saying, well, everyone's going to be working from home, but we've got to get their phones redirected as well. So keep that in mind. A couple of other considerations I've thrown down there. If you do decide that your staff are going to continue to work from an office environment, you have an obligation to keep them safe. What we mean by that, and we've implemented it here over the last week or so, distancing, so you've got to keep everyone's desks so far apart from each other, making sure you provide alcohol wipes, hand wash, document the fact that you've told them everything they need to do. Cancelling client meetings. No one should be having client meetings in the current environment. It should all be done online where possible. I tried to meet with a client. I was supposedly going to meet with them on Monday, but the bank has basically said no more meetings for staff in the banks either. So yeah, shouldn't be having any client meetings. And look, the last point there, a lot of people do have underperforming staff, and if you've really struggled to get rid of them in the past, now's a perfect time to do it as well. So keep that in mind. All right, moving on to suppliers. So probably the big area we get asked here is in relation to rent for staff, for businesses. We're going to sort of look at that first. Now, particularly if you're going to be working from home or if you have to shut your doors. Now, again, I know a few people online have had to go through those steps where they're shutting their doors. Firstly, have a look at your rental agreement. Is there anything in there about these types of events, and whether they, if you're forced out, whether by their hand or by the government's hand, whether you can apply for free rent automatically from your landlord. Even if it's not in your rental agreement, your landlord probably wants you, well, they know you've what the economy's like. They want you there long term. If you're a good tenant, speak to them. Tell them you've had to shut your doors. You'll be back in a month, 2 months, however long it takes, but you'll only be back if they can give you a rent-free period over that time. If you're on a month-by-month lease, look, we don't know how long this is going to last for. I know a situation where a client has actually just said, look, we're just walking out. We're not paying on a month-by-month lease because we don't know how long this is going to last. All you can do is talk to your landlord, put it in writing, and we we are in the process of sort of drafting up something that's a template that you can send to your landlord as well to get some relief. So keep that in the back of your mind. Insurances, check out your insurances, what you're entitled to, or if you've got a broker, speak to them and see what you're entitled to before. On the marketing side of things, I just touched on this before. Have a look at how you're spending money right now. I know a lot of people have probably got AdWords running in the background that probably aren't going to be effective for the next 2, 3, 4 weeks, months, whatever it might be. Switch them off now or change your messaging. Again, I mentioned before, why is right now the best time for these people to be buying from you? Change the message and how you do things. And now's a really good time to look at your website and have a bit of a refresh. Keep in mind, you guys are business owners out there. I tell you now, I have a look at a lot of websites around, and there's some really bad ones. Not pointing any fingers to anyone in the group, but if you've been thinking about doing a refresh of your website or anything like that, now is the time to be doing it. So keep that in mind. All right, and the other side of things is just having a look at any non-essential costs that you might have. So any repairs that you might want to do. Some people pay for staff lunches. Look at all your software programs that you're using. Run your eye down your whole profit and loss statement to see what is a non-essential cost for you right now. And that's going to be different for everyone. And until you have a look at your profit and loss and see what's in there, you won't know what you can save on. All right, loan payment. So this is again going to be a big one for a lot of people out there. We talked about what the federal government and the state government is doing in relation to loans, but you've also got to think about who you're currently banking with and what relief they might be able to offer. And the important thing is, if you're struggling, do this now. Don't wait, because there's going to be a lot of people knocking on the bank's doors over the coming weeks. So keep in mind that every bank has different policies, and every bank is going to be different to what they're offering their clients. And particularly, a bank's policy today may be very different tomorrow and in a week's and a month's time. So keep an eye out on your bank, who you bank with, and see what they're offering. Now, as an example, we're just Commonwealth Bank. We bank with Commonwealth ourselves, so we had a look, jumped online to see what they're offering. So as an example, Commonwealth Bank right now, or a couple of days ago, they're offering deferring repayments on a variety of business loans and overdrafts for 6 months. Okay, so if you've got a business loan or overdraft with the bank, they're offering a deferring repayments. They're reducing their commercial interest rates by 0.25%. Now, I think they're doing that automatically, so keep an eye on that. If not, speak to them about it. Really good one is they're waiving their merchant terminal fees for impacted customers with the payment terminal for 90 days. Now, unfortunately, a lot of those are going to be in the restaurant or cafe industry, so it's probably not a huge impact. Waiving early withdrawal fees of business term deposits, waiving establishment fees, etc. And this is probably the main one. A lot of banks are doing this one, is deferring. If you've got a vehicle or equipment finance, they're actually deferring the repayments on that. And I know a lot of banks and providers are doing that. What they're doing is they say, well, they'll give you 6 months where you don't have to make a repayment, but then they'll just tack that 6 months onto the end of that finance. So again, find out what your bank is offering. All right, so I think this is the last one on the list. So we're in the home stretch now. This is particularly important from our side of things. We get a lot of clients asking us about this one, about what the tax office is doing in relation to tax debts. So we'll run through a couple of those. Now, this is over and above the pay-as-you-go withholding relief that we talked about before as well. Now, the first thing that they're offering, now when I say offering, I'll just read through the deferring BAS payment date for the by up to 4 months. Now, what we mean by that is that you still need to lodge your BAS, and you need to lodge your BAS for those the pay-as-you-go withholding that we talked about before. But what they're doing now is they're saying, well, look, we know everyone's struggling. We're going to extend that payment date for up to 4 months. So you don't necessarily need to apply for it at this stage, but if the ATO do send you an automated notice, because that's what will happen, their system will jump out and say you haven't paid your BAS. It's a matter of just getting on the phone to them, having a chat, telling them your situation. And I can tell you now, the ATO is being very generous when it comes to offering deferrals of payments of these. You won't have to go through the rigmarole that you've had to go through in the past to try and get them to agree to some of these arrangements. So keep that in mind. If you've been paying tax instalments on your BAS, so you've got your March BAS coming up very soon, you can vary that instalment down and also look at claiming a refund on your previous instalments for September and December. Now, I've got in brackets there, if appropriate. Now, what we mean by that is don't go and blanketly ask for a refund, because at the end of the year, if you've got tax to pay because you've made a profit during the year in total, you'll still have a tax bill. But if you're really struggling, there is that option on that March BAS to not only vary that tax instalment, but also apply for a refund for September and December. Next one, tax office is also remitting any interest and penalties that have been incurred after 23rd of January. Now, again, I'm not quite sure if that's automatic or not, or whether we'll need to apply for that. I'm thinking they're going to make that automatic, otherwise they're going to be inundated with phone calls. But if you do get hit with any interest and penalties that relate to the period after January, give us a call and we'll speak to them about getting those remitted as well. We're also looking at low interest repayment plans, which are coming up as well. And keep in mind, you still need to lodge things on time. Now, the important thing there is super. It's still important that you pay your super on time. That is totally separate to any ATO tax debts. Superannuation's got nothing to do with the tax office. The superannuation is for your employees. You still need to pay it and pay it on time. So keep that in mind when talking about the tax debts. Look, guys, there is no easy solution in all this. I really wish I had one. It is going to be very tough for a lot of clients out there. I said at the start of the webinar that our clients will probably fall into 3 categories. Those that will not survive in the next 6 months, and that's just a brutal reality. You guys out there, if you're right now thinking that that's you need to consider whether you need to shut your doors now. And whether that's shut your doors now or shut your doors for a month or so until this all blows over, only you will know. But by shutting your doors and reducing your overheads as much as possible, asking for that rent reduction that we talked about, laying off staff when necessary, because typically they're your biggest 2 expenses, this is the hardest decision you're going to have to make. And this is the time you're going to have to make it. We've even had clients talking about upskilling themselves to a new profession because this has ruined them in many ways. So yeah, it's tough times and tough decisions have to be made for you guys. Now, the next, as I said, there will be some businesses that thrive out of all this. So doctors, we've got clients in sort of the hygiene area, delivery drivers in particular. Consider taking on new staff right now. There's people lining up for work. But more importantly, use this time wisely. Build up a nest egg so that in tough times, because tough times will come for you at some stage as well, so that you've got enough money to get you through downturns, okay? But don't forget, even though your business is thriving right now, you're still able to take advantage of the government announcements and initiatives. So keep an eye on those, even though your business may be doing really well. The next category is probably 90% of people online now. 90% of our clients will fall into this category, and we will too. It's those businesses that are going to struggle over the next, again, I wish I had a time frame for it. The government is saying 6 months. I really hope that's not the case. I'm hoping, and again, I said at the start of this that I'm usually an optimistic person, I'm hoping it'll be 6 weeks. We don't know is the answer. All we can do is say take whatever precautions you need to do now, and take action now to get stuff done. Minimise the losses that you may have to take, and make sure that you come out of this the other side stronger than when you went in. I wish I had better words of wisdom. We're struggling as much as anyone else out there at the moment. It's tough times. So not only look after your business, look after yourselves, look after your family, your health, and most importantly, everyone out there who's a business owner. They're all struggling. All right, so we'll jump on and see if there's any questions in a sec. Just from our point of view, what's next? We will send you out an email after this. We'll make these slides available so you can run back and go through them. We'll send you an email. We're trying to develop some templates and checklists at the moment. We're going through that process, so we'll shoot you an email in the coming days. All right, so I'll stop sharing my screen now, and that will enable me to see if there's any questions that have come through, and we'll see if we can hopefully answer a few of those along the way. So I'm just going to start. So Neil, I can see you online there. Thank you for popping along. So Neil's question for everyone in the group, if you haven't seen it, is, has anyone else read Profit First? He's going to start implementing it this week and try and ensure my business will thrive. Yeah, Profit First is a really good book. Just for those who don't know it or haven't heard of it, what it basically says is that pay yourself first. Well, basically they talk about buckets and having different buckets for, oh, hang on. Petra's going to take over here. She's read the book. I'm going by what clients have told me. So Petra, Profit First.
Yeah, a lot of books and I guess sometimes another. Profit First is very similar to the Barefoot Investor. It's Barefoot Investor is tailored to families and individuals. Profit First is.
Okay, we're just having, it sounds like, okay, a few people have said they can't hear Petra. Yeah, so can you hear me? Just give me a thumbs up if you can hear. Okay, so you can hear me. All right, Petra's just going to go a little bit closer. Give that a try.
Hopefully this is better. I just plastered myself on the screen. I guess Profit First is very similar to Barefoot Investor. Probably a lot more people would have heard of that one or read it. Barefoot Investor is really tailored to just saw the social distancing messages. It's really tailored for individuals and families and how to manage your money and really build it up for the future. Profit First takes a very similar approach, but in relation to your business. So really thinking about where you want to head, how much you need to make, and really work your way backwards. And I guess very important thing is to plan ahead, set up different bank accounts for different things. So if you're going to have tax obligations, if you'll have to pay super, plan ahead, have a separate bank account for that, and make sure that either every week or every month, depending on how much money you have coming in, you put the money aside. Similar thing applies to expenses. So I guess we'll all have a bit of time on our hands, so good time to go through your expenses, eliminating anything that you don't need right now. Obviously, there's no point trying to eliminate something that's absolutely minor and still keeps you happy in a process. There's no need to do that, but just thinking the big picture so that we can all get through this. So that's that.
So I'm just going to have a look through a couple of other questions. I'm just going to work my way up. There are a few earlier. Let me have a look here. So profit first, yes. Yeah, so Vanessa and Dean, so what their comment is we all need to be thinking outside of the square and looking at other alternatives for bringing in income. Now, a couple of points there on that one is, as I said, I posted that thing for Friday for that Dale Beaumont. He is big on that and will cover lots of those things. So book into that session. He'll have some great ideas in and around that. So absolutely. I will I have a business owner whose accountant has said to declare directors' drawings as wages on March BAS, even if they have not withheld tax. Is this correct or deemed dishonest? I'm going to be perfectly blunt. The accountant needs to be shot. That the ATO have come back and basically said that they will, well, Petrol, take this one.
I'll take this one because I don't shoot people. Robert gets the answer. Look, if they told them not to withhold tax and not to pay super, then it's absolutely dishonest. We were going to advise a lot of our clients that in the past got paid either in form of dividends or trust distributions to flick around and put themselves on salaries. If you do it the right way, in my eyes, you work in your business, you're in the same boat as any other staff, and that should be fine. However, last night, the ATO put up a big post that this is something that they're going to be looking at closely. If there's any discrepancy between how you treated payments to yourself in the past, as opposed to what's going to happen from 1st of January on paper, they may really question it. We're working closely with the Institute of Chartered Accountants, Tax Institute and so forth to really lobby to have a bit more clearance on this and really to make the ATO understand who they're trying to help. Really, we're trying to help mum and dad's businesses that worked hard for many, many years, and therefore they shouldn't be not able to claim these on technicalities. But as it stands right now, it's not the safest option to do. Then again, we don't have to do the March BAS till mid-April and so on. The payments will not come through until 28th of April anyway. And we're really hoping to have more clarity on this, and obviously we'll keep everyone posted and we will do what's best for our clients. So that's my take on that.
Yeah, that's a really good and tricky question. One we've been keeping an eye on has been asked a lot. So yes, the tax office have said that they will, well, it won't be looked on favourably. And I was mentioning before in the session that anything you do is going to come under the Crimes Act, not the Tax Minimisation Act. So you really need to be very careful on that one. So Darren, I just saw your comment there, thinking of downsizing to sole trader, but maybe I should stay as a company. You should stay as a company for the time being, absolutely. But we can have a chat about your circumstances around that as well. Okay, just having a look, Neetha, can we get some more information about wages reduction from work cover? When you say wages reduction, Petra's just looking up something now.
Yeah, I saw the message from Christy. that said that the workover is accepting the wages reduction to reduce your premiums. So I guess that's going to be on a case-by-case basis. So really the first step would be to contact them directly. So if we do workover for any of our clients, we'll do that on their behalf. If you look after this yourself, you'll have all the details and just get in touch with them. But of course, if you need any help, let us know. We'll just have to get your workover ID.
So good point there from Neetha. Just for the rest of the group, Neetha has actually said we're sharing subscriptions for some applications, so obviously to reduce some cost there. So something for everyone to think about. Where can you share resources with other people as well? Just running through some questions. Yeah. Some are specific to particular people, which we'll speak to later, but I think we've probably covered everyone. There's so many messages there. I'm not sure if everyone can see the messages in the side chat or not. So if you do have any other questions, maybe just throw it in the chat box there now, because there's quite a few that have gone through with all the people that are on board at the moment. So what we're going to do is we'll leave it open for 5 more minutes, because it's 5 minutes to go till 1:30. If anyone does have any other questions, or they've put it previously and they didn't get it answered, if you want to pop that up now, and we'll just spend the next 5 minutes running through some questions before we wrap it up. So if you do have to leave for whatever reason, totally understand, but we'll be here for another 5 minutes with any questions you've got. For anyone who does have to leave, thank you guys for coming along. Be safe wherever possible. And if you have been trying to get hold of us recently by phone or email, bear with us. It's a very busy time for us, just trying to get our head around everything that's happening and put these sorts of events and things together. As I said, I think there was about 80 slides we had to do to get all this information out there, so it's all good. Question from Mark: can you please confirm the application date for payroll tax in Queensland? Application date.
So you can apply for the refunds by 31st of May.
Yes,
but obviously the sooner you do that, the better. I've done it for a few clients this morning, and the message was that it should be processed within 10 business days.
Yep. David, bank's position on home loans used for business. Again, it's going to depend on the particular bank on that one. And how that proceeds. So yeah, depending on the bank, you'll need to chat to them about that one. Jasmine, just having a look at yours. If I have reduced my wage in favour of dividends, which I've not had the cash flow to pay, can I just put my wage up without getting questioned on this? All depends on timing. So if you'd have to have a look at it and say, if you've reduced your wage, when did you reduce your wage? If it was in the current financial year and you've gone from wage to dividends in this year, and now you want to flick back to wage, will probably be all right. But again, it comes back to how commercial was the decision. Have you done this just to get this subsidy, or is there a commercial reason for doing it as well? All right, so no more questions coming through at the moment. We may well finish 2 minutes early if that's the case. All right, guys. Well, again, guys and girls, I should say, sorry. Thank you all for tuning in. Hopefully you got something out of it today. As I said before, check out the Facebook webinar from Business Blueprint on Friday. We'll be tuning in, hopefully getting some good tips on how to keep business going and growing through this crisis. So thanks again all for coming. Please reach out to us if you need any assistance during these times, and hopefully we will catch up to you soon. Thanks, team.
All right. Thanks, everyone.